The U.S. in those days was on a gold standard. They had a balance of payment surplus. They hardly owed any money at all. They didn't have credit cards. They didn't have loans like we have had and do have today. They didn't have corporate America strung out heavily in loans and large inventories, and they had a fairly peaceful population. There wasn't the crime that exists today. So I think it's going to be 5 times worse. So I don't think there's going to be any 1932 type rally because of the stimulus package. I think the stimulus package has already been baked into the cake, and I think it's been discounted, in other words. And this market isn't going anywhere. And the reason it's not lower is because the United States government steps in and keeps it from going lower at propitious times. Now, we're looking right now, and this is from David Rosenberg at Merrill Lynch, chief economist, strategist, whatever he is there, top man. He's very good. And he says he's looking at $28 a share earnings for the S&P 500, which relates in today's prices on the Dow Jones Industrial Average of 30 times earnings, and the same with the S&P 500 average, 30 times earnings. Now, normal price-earnings ratios are 15. Now, if it's 30 and it's 15, which is normal, that means that based on earnings, the Dow should drop 50%, or to 4,000 from 8,000 in round figures. The worst possible case is in depressions, markets don't sell at 15 times earnings. They sell anywhere between 5 and 10 times earnings. So if we take 7.5, we're probably looking at 38 to 4,000 on the Dow. And that's what I predicted 22 months ago.
Well, now, of course,
that's where I think it's going.
Are you talking about the Dow, or this 30 times price earnings ratio? Is that the Dow, or is that the Standard & Poor, or both of them?
It's the S&P.
All right.
But it's somewhat similar with the Dow.
All right, fine. So basically, the stocks are still overpriced because the earnings have fallen and fallen precipitously. And, I think that the people who are hanging on to their stocks are being told, oh, just hang on, they're going to come back again. Well, what happens if Bob is right? And I suspect he is. We're just at the beginning of this whole financial crisis. Remember, 4.5 months ago, they told us this whole thing centers around the drop in housing prices, and we are going to do something. Just give us the $700 billion that we asked for, and we're going to take care of the housing prices. 4.5 months later, they've done absolutely nothing. But they say, well, in a couple of weeks, we're going to come up with a program. Well, what do you mean a couple of weeks? It's been 4.5 months. Do you really expect that we're going to believe you when you say you're going to do something now? It should be pretty obvious to any intelligent individual that they have no intention of solving the problem. Because if they don't have the problem, how are they going to collapse our economy? How are they going to impoverish our people? How are they going to carry out their real agenda, their real goal, which is the destruction of our economy and the establishment of a world economy, a world financial system, and of course, the new world religion. That's very important because, of course, behind all of this are the powerful spiritual forces that energize these wicked, wicked, wicked men. Well, Bob, Sidney, what's going to happen as far as gold and silver? They're not doing much of anything. Gold was up a little bit last week, and silver's, doing fairly well, but got a long way to go before it even gets back to where it was a year and a half ago.
Well, I think we're going to see that here very shortly. And I expect gold probably will sweep down to 932 on Tuesday. It was relatively unchanged today. And that'll be the second sweep through that area. And that should solidify the gains above 932. And I think in the next perhaps 2.5 months, that we will see gold challenge 1030 and break it. And so we got a very strong upside. Silver selling in the $13 area, let's see, to be exact, $13.61. It'll move back up and challenge 20. Probably get through to 25. If gold breaks over 1033, it'll probably move up to 35 if gold goes up to 1200. And at probably 1700, you'll probably see $45. And so the whole thing's ready to go. The chaos in the financial markets is just being extended, and gold and silver are not going up because the inflation is great at this time. It's around 9 or 10%, and that's not good. But what's coming in is the effects of monetization by the Fed and the Treasury, and that'll start in March or April. And once it starts, people will start to notice we're in a depression and we still get inflation at the same time. Not a happy affair. And at the same time, they'll be calling for more and more bailout packages of one kind or another. And the real hook here is Europe. Europe's in serious trouble. And their problems are greater than the problems that the United States has, if you can believe that. What people don't know about right now is that a lot of loans were made in Eastern Europe and in Latin America or in Asia, but particularly Eastern Europe, and they were made for mortgages. And those loans were made in Swiss francs, and the currencies have all gone down 40 or 50% against the Swiss franc. So if you were paying $500 a month for a mortgage, hypothetically, you'd be paying $750 a month because it's dominated in Swiss francs. So what's happening is they're having massive foreclosures in Eastern Europe, and that's going to cause chaos.
Well, it's really such a tragic situation and just so much suffering for common people or for the average individual out there. And of course the government here is going to extend unemployment benefits, but it's pretty hard to get by on unemployment benefits. It's better than nothing. So what they're going to do is try to hold off really, of course, the things getting really terrible by just giving people money, and even people who don't make anything, don't pay any income tax, are going to give them money too. It's just like a money machine, but nobody ever asks, where's the money coming from? Well, we'll borrow it from other countries, but what happens if they won't lend it to us? We'll be right back. Go right ahead, Bob.
Incidentally, I've written about this situation in Europe for the issue that's coming out on Wednesday. For any of you people who wanted to get a free introductory copy, and for those of you who are our subscribers, you know it will be there under the Europe section. But it's dreadful. And what it's going to do is bolster the Swiss franc, and the Swiss franc is a carry trade currency, and a lot of this money is going to get fed back into the Swiss franc as the foreclosures are completed. It's going to be somewhat like what happened to the dollar over the last 10 months. It went up in spite of all the problems it's got because of a return to the dollar currency. And I think that the Swiss franc is going to be the strongest currency in the world, along with the yen. And then somewhere along the way here, the dollar, which is already topped out, it's been selling in the 115. The Swiss franc's been selling in the 115 area, 116 to be more close. And the yen is 91.93, which is 92 to a dollar. And they will remain that way, but the U.S. dollar index, which is the USDX, closed at 86.11 on Friday, and it had a high of 88, and it can't break out to the upside. And so I expect that by the end of the year, there's a good chance it will be back down in the 70s again. And that's going to put a lot of pressure on all of the financial problems And at the same time, if anything, it'll make gold and silver stronger, although they have broken away from each other.